Good morning. Welcome to Stock Market Today. It is Wednesday, November 18th, 2020, and this is your host, Dan Russo, Chief Market Strategist at Chaikin Analytics. You can find me on Twitter. I'm at Dan_Russo_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. Sign up for a free email. Also get daily stock ideas to consider. It hits your inbox every trading day before the market opens. So U.S. equities finished mostly lower in Tuesday's trading. Utilities and healthcare were the sector underperformers, while energy and REITs were the only sectors to close higher on the day. We'll also note that small caps closed higher as well. Treasuries were stronger with the curve steepening. The dollar was weaker on the major crosses. Gold was down 10 basis points, and WTI crude closed up about 20 basis points on the day. Now, as we get to the desk this morning, S&P futures are up 40 basis points following a final analysis of the Pfizer vaccine for COVID, which showed a 95% efficacy rate. Asian markets were mostly higher overnight, with Taiwan leading. We'll note that Japan underperformed. European markets are mostly higher, reversing an earlier pullback. Treasuries are mixed, with the curve flattening. Gold is down 60 basis points, and WTI crude is up 80 basis points to kick us off on a Wednesday morning that, starts with more of the same. SPY holds the breakout level. IWM extends. The Qs are still trying. All three funds are overbought by our work, and we go through this in our note today. Kind of look overbought, oversold as a short-term indicator. We want to get a sense for where are we within the context of a trend, right? So if we assume we're in an uptrend, well, where are we within that trend? Overbought, oversold. In an ideal world, you want to get more aggressive when you are oversold within the context of an uptrend. You become less aggressive or more selective when adding ideas to the portfolio when you're overbought within the context of an uptrend. At least that's how I view it. And we are currently in an overbought situation for a lot of the main market ETFs, a lot of the key themes that have been working. So for the SPY, support 340, then 320. Qs 260 is key support. We're still above 280. Which keeps the September highs in play, but they are making it interesting. For IWM, support near 170, and we have taken out, as I said, we've taken out the 2018 highs, which is a bullish development. So structure of the market remains the same. All eyes continue to be focused on rotation. And as we'll look at a little bit later on in the show, I'm going to show you that the rotation is not as simple as just growth to value, right? You have to pay attention to some of the other factors that are in play. And we'll talk about what that means as we get a little bit deeper into the show today. Let's take a look at our market in a minute. What are we writing about today? Well, energy, REITs, and small caps shine on a mostly lower day for stocks. We touched on that. Major market ETFs are all overbought in the near term. That's our short-term overbought, oversold indicator that I just discussed. And that's playing out as sentiment has become more greedy this week, which you kind of expect. The market's moving higher. You would expect that shift in sentiment. Personality change for insurance. We're starting to eye one up there. And as I said, futures do point to a higher open here today. As we look at the major indices from a power bar perspective, the Dow lost 50 basis points yesterday, but remains 3-0 on the bull to bear ratio. S&P 500 loses a like amount, 131 to 38 bulls to bears there. NASDAQ down 30 bips, 15 to 12 bulls to bears. There's your small caps up on the day, up a half of 1%, 833 to 190 bull bear on that ratio. Bonds uptick, sending yields slightly lower. Energy was your best sector once again, coming off of a strong day on Monday. Up 1%, 3 bulls to 2 bears there. So according to the Chaikin Power Bar, small cap stocks and large cap stocks are strongly bullish. Major markets across the board are mixed. Let's look at our stock of the day now. So with markets overbought and with the potential shifts playing out under the surface, I think it's a good idea to kind of start going through the portfolio and looking for, names that had been leaders that could potentially be rolling over. And one of the names that jumped out at me was Veeva Systems, ticker VEEV. Has a bearish Chaikin power gauge rating and a weak trend. It is now traded below our long-term trend line. It's part of the healthcare tech group, which is strong. So a little bit of a mixed bag there. But what I'm really keying in on is the potential personality change here, with the stock now beginning to underperform the S&P 500 after a long bout of outperformance. This was one of the big leaders coming out of the COVID bottom and subsequent leader throughout the rally And now it appears to be stalling out, at least on a relative basis. We can see that it's stalling out on an absolute basis as well. Overbought, oversold indicator tried to rally and couldn't even get above the midline before beginning to turn lower once again. And Chaikin money flow is kind of intensely bearish here in the near term. So the way I'm kind of viewing this is a break of 250 turns the trend lower, in my opinion. So, Veeva is one of those names where it's been a strong stock, but I think it makes sense if you own it to think about what your risk management process looks like, as it does appear to be showing signs of a personality change, with money flow becoming intensely bearish, with the underperformance starting to creep in, and the fact that we've now taken out the trend line. Notice the trend line really kind of acted as support numerous times, and now we've broken it and it is beginning to flatten out. So just something to keep in mind here if you own a name like Veeva. Taking a look at our sector tracker now. Movement of the major sectors over the last 5 days of trading. There's no doubt that energy's been the bright spot in the near term. Real estate also seeing a little bit of resurgence, likely a function of better vaccine news. Obviously, we had the Pfizer news last Monday. This past Monday, Moderna, now more vaccine news. So some of the reopening trades coming back on. Nice to see tech bounce back to the top, into a top 3 slot. Industrials round out the top 4. Staples, comms, and discretionary on the middle of the road. And the laggards so far this week, financial over the past 5 days, financials, healthcare, materials, and utilities. And I think it's interesting. Remember, a lot of people were pointing to the utilities outperformance as a reason to be concerned. And, our view was that it was benefiting from a rotation out of low yielding treasuries, and that, we would really need to see the staples and the utilities outperforming strongly together to be concerned about the equity market. And that wasn't the case. And now we see utilities move to the bottom of the list. Materials, a little bit of profit taking here in the near term. It's been a great trade and one on which we've been bullish. Turning to our industry and focus now, retail services, apropos as we get close to the holiday shopping season. Over the past 6 months, retail has outperformed the S&P by 25%. Power bar ratio, which looks at future potential, is strong. We have 23 bullish stocks for 9 bearish stocks. It's currently ranked number 13 of 21 subsectors, and it's moved down 1 slot over the past week. So some of the interesting names there that warrant some extra attention, perhaps a little bit of a deeper dive. Group 1 Automotive, GPI, Penske Automotive, PAG, and AutoNation, AN, all with very bullish Chaikin power gauge ratings, and all holdings of a fund that, well, has a neutral rating, actually. The ETF rating here for XRT is neutral. The trend is strong above the rising long-term trend line, and the relative strength is still there. Bearish money flow near highs, not always something I like to see. We're seeing a lot of that, actually, so just something to keep in mind in the near term, especially with markets overbought, as this fund is overbought as well. Check out the overbought, oversold indicator moving higher within an overbought position, and that's a very similar dynamic to what I see for the main market ETFs. I highlight that in my note today, but the outperformance is there. So we want to skew to the relative strength while being mindful of the near-term dynamics that are playing out. So XRT, certainly an interesting area of the market. I mean, you can't argue with all-time highs, and that's where we're trading. And you can't argue with the outperformance. So probably makes sense to be mindful of this group when looking for new ideas, especially if it cycles down towards an oversold position. Let's take a look at what's trending now. Yesterday's S&P 500 gainers and losers, our movers and shakers. We talked about the REITs as a group earlier. So here's SL Green towards the top of the list yesterday. Some reopening optimism, perhaps some vaccine optimism playing out in some of the beaten down areas of the market. Ralph Lauren, the apparel and footwear space was strong yesterday. Ralph Lauren, a neutral stock, up 6%. VNT, we don't have a rating on that one yet. No news that I could see, but the stock was higher by about 5.25%. Devon Energy goes along for the ride with the energy names, up 4.6%. And Phillips Van Heusen, PVH, again, a beneficiary of the strength that we saw yesterday in the apparel and footwear space. On the loser side of the board, we'll start with Boston Scientific, BSX, down nearly 8% yesterday on a product recall. Everything else is a function of Amazon, and in particular, Amazon's announcement that they are getting into the pharmacy business. So, pharmacy distribution, right? So that's obviously going to have a big impact on the distributors like Cardinal and McKesson at the bottom of the list there, sit down 6.5% and 5.5% respectively. Certainly going to have an impact on the drugstores, Walgreens, Boots, WBA down nearly 10%, CVS down 8.5%. Other names that are probably impacted there, names like Rite Aid as well. So just something to be mindful of. You want to be kind of paying attention. It is kind of interesting that this is likely a function of Amazon's acquisition of PillPack. I know the Wall Street Journal is talking about it today, but Amazon launched Amazon Pharmacy, right? And that's putting pressure on the drug supply chain. So just something to be mindful of in the near term as you're looking at some of these names. Just be mindful of the competitive threat now posed by Amazon. Let's take a look now and get into the charts. On Wednesdays, we do sentiment as always. And the top chart, we show it every week, and it's just amazing to me that really since the May-June timeframe, we've been in a position of excess greed if we're looking at equity options traders. The equity option put call ratio continues to be at levels that mark excessive greed, not leaving those levels. It's amazing. Going back 5 years, we've never spent this much time in a level of excessive greed, but now we are. So make of it what you will. What I will say is, as the markets moved higher, sentiment has certainly improved. The Bank of America Merrill Lynch Fund Manager Survey was out yesterday. Everybody was picking through it. The thing that jumped out at me was the fact that cash levels are down to about 4.1%, approaching levels that were seen just prior to the highs in February. So not to say that we're going to see a 35% drawdown, but something to be mindful of as we connect the dots. Sentiment is no longer a tailwind. Investors are buying into the rally, and that's playing out as I said, the markets are near term overbought based on our indicators. So just when you're thinking about ideas and thinking about how aggressive you want to be with new ideas, something to be mindful of. Same time, VIX has come into the low 20s. Take a look at the VIX at the bottom of the screen there. After spiking a couple of weeks ago back towards 40, we've kind of settled back down in the low 20s. So another sign of less fear, if you will, in the marketplace. So just from a sentiment standpoint, becoming more greedy or remaining greedy, actually becoming more greedy, playing out as the markets are in an overbought condition. All right. So now the rotation, a lot of people are talking about the growth to value rotation, but it's never as simple as it seems because there are other factors at play. And part of that is the large to small rotation. And you can see here the IWO, the iShares Russell 2000 growth ETF, right? So you say to yourself, oh, well, growth to value, but you also have to factor in the small to large or large to small rather. And what you get is small cap growth trading at new highs, confirmed by momentum as the RSI is now overbought and hasn't become oversold. So a shift into a bullish regime from a momentum standpoint. If we look at the bottom of the chart here, IWO relative to SPY, after breaking out and consolidating briefly, trading at relative highs here. So it's not as simple as growth to value, right? There's a lot going on under the surface, and it's why you want to kind of drill down and do the extra work and see what's actually happening a layer or two below the main market averages. And finally, a little personality change in insurance, potential there for personality change. KIE, the Spider Insurance ETF, topside breakout from a consolidation, money flow spike, and a slow turning in the KIE to SPY ratio, going from a big underperformer to stabilizing to now starting to move topside on a relative basis. So that's something that we look for when we're looking for potential shifts in the market and where new leadership can be emerging. I think you want to be paying attention to a group like the insurers and drilling down on that space. So that'll wrap us up. Take us for a test drive. I'm back with you tomorrow.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.